Okay, so let's go back to what is an event for the marketplace. And by the way, we'll get more on this Lisa Cook situation in moments. But for more now on the record highs and the AI boom, let's bring in Joe Cusick. He is portfolio specialist at Calamos Investments, coming to us from one of my favorite places, the SIBO. Tell everybody there, Joe, that we said hello. Love that place as well. Very quickly, I'm not going to ask you to dive into the politics of it, but are you surprised that all this brouhaha around the Fed is not impacting bonds of the markets?
A little bit surprised, but no, because you've seen that we've had mispricing and volatility as far as the implied and what's actually realized. So, you know, as an old options trader, this is basically what we expected. The market doesn't care, and it hasn't, and it's not, and it's steady as we go, and that mispricing has been in place for a while.
And the VIX, the so-called fear gauge volatility index, which really just sort of measures options pricing and spreads, that's not indicating any nervousness at all. But when the VIX is this low for this long, Joe, I guess I've got the old options trader sort of semi in me as well, because that makes me nervous.
Yeah, well, yeah. I mean, look, I saw some of my old buddies that I used to trade with down here. Look, the Spidey senses are up. The level of complacency, I've been talking about it, you know, as a hedged equity strategist. You know, the bottom line is that we are concerned, because navigating this complacency without any guardrails to the downside, it absolutely scares me. And institutions have to stay in this market, and retail, well, they're starting to feel like they might have to chase a little bit. So right now, that complacency in the VIX is something that over time I have found throughout my career is a little bit of a yellow flag at this point in time.
Yeah, I agree with you, Joe. And I think the market participants have realized that the sell-offs don't last that long. Just go back to April, lasted maybe 3 or 4 days. And I think the game now is that, you know what, we're going to continue to sort of full speed ahead, as you just said, because we'll be adept enough and quick enough to exit if, in fact, an event comes. And I think that's where the market is at this point. Of course, you know, having done this for a long time, markets go down a lot faster than they go up. And we saw glimpses of it in April. We haven't seen anything since. Anything on the horizon? Steve mentioned seasonality into September.
Yeah, you know what? Look, I see some yellow flags coming up in the energy sector. I still see that the institutions are buying puts en masse. The skew has really come up, and we've actually seen recently that put spread activity is really kicking up. So coming into September, while we've seen that the trajectory is still to the upside, we're at all-time highs. You can't debate that. You're starting to see positioning that's continued with institutions hedging en masse and buying calls in lieu of buying underlying. And you're seeing retail now coming in and doing put spreads in things like the S&P 500, using hedged equity strategies and so forth, because there is a lot of uncertainty that's starting to grow, even though it's not reflected in volatility.
So, Joe, in your career and in my career, we've watched institutions run the market. Now we've seen retail lead in the market. How do you address what you look at? What are your signals now that retail investors are actually moving the ball, not institutions?
Well, first of all, you're going to see a lot more speculative moves. In other words, you're going to see option volumes through the retail shops start to increase notably. And we're starting to see that. It's starting with spreads, and you know, we're going to continue to watch that. The other thing is, too, is that you're basically going to start to see that the transition into looking at the unloved stocks, the ones where it goes beyond means, but it's going into spaces that haven't had a lot of love, and seeing that's where the retail is going to show up. I think that the institutional side is fully vested at this point in time. We've seen that. We continue to see that. But that's where you're going to start to see this movement to more of a broad-based move. That's where you know retail's coming in.